Welcome to our channel, and more importantly, welcome to another free stock market breakdown video that we release every Sunday at 2 p.m. Eastern Standard Time. In these breakdowns, we will cover the latest news developments that will affect the market, as well as break down the broad market and other instruments for opportunities that may be brewing this upcoming week. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description below. So let's get right into it. So to start this episode, as a spin-off from last week's episode, the UK has officially become the first Western country to approve a vaccine for the virus. So this was to be expected, because if you watched our breakdown from last week, this was already speculation in the news and the markets were already reacting to this. So the UK plans on beginning vaccinating people on Monday, and they're hoping to have around 100 million doses of the vaccine before the end of the year. So we'll see how this goes, and this is definitely confirmation of positive news for the markets, and when we take a look at our charts, you'll see the reaction that the markets had on the onset of this news. Now moving across the Atlantic to the US, there's a little bit more dreary news going on. Nearly 6 million people in the San Francisco area have gone back under a mini lockdown because of rising case numbers in California state. Now this is supposed to be followed by a statewide stay-at-home order, but I don't really think that this news story will have too much of an impact on the markets, merely because we've seen this happen before. When France, Germany and the UK went on their month-long lockdowns, the markets literally rallied the next day after that news broke. So I don't think it's going to have too much an effect on the equity market. I'm definitely still under the impression that the vaccine news will trump any sort of downside momentum that could be generated by this story. We have to remember, the markets don't necessarily act based upon what has happened, but the markets react to what will happen. And right now, the markets are predicting the vaccine essentially to cure the virus, so any stay-at-home order is just something temporary, and the markets are fully expecting us to have a full recovery because of the vaccine news. Staying on American news, the next story that came out that is probably of some form of significance is the fact that they only added 245,000 new jobs last month, which is the lowest number of new jobs added since the recovery began in May. Just for comparison, I'm going to show exactly how this 245,000 number adds up to what's been going on over the past few months. So essentially, the stock market and economists had been predicting a number of around 470,000 new jobs to be added. So the actual number of 245,000 was around half of what the market expected, therefore severely underperforming their estimate. So typically the markets would react negatively to this news, but as you will see when we look at our charts, the markets didn't actually react at all. And as you can see, over the previous 3 months before that, the job growth was within tolerance of what the market was expecting. But honestly, the reason why I think the market hasn't really reacted to this is because of the positive vaccine news. Remember, as I mentioned earlier, markets are usually leading indicators of economic recovery. So the economy is always lagging the stock market. So the stock market is predicting a recovery, and therefore any negative job numbers will not bear any relevance because they're anticipating that once the vaccine is rolled out, things will get back to some form of normal within 6 months to a year. Whether or not the market is correct or not, well, we'll have to wait and see about that. Moving over to our charts and taking a look at the S&P 500 on the 4-hour time frame, we can clearly see that our trade idea from a couple of weeks ago is currently underway. Moving down to the 1-hour time frame, personally, any pullback opportunities into this green support zone will be buy opportunities for me. And I definitely think that we're currently underway to hitting our first target of around 3,740 points. Now my theory for this trade isn't just specific to the S&P 500, because right now every single equity market is currently looking very bullish. And as we take a look at a couple of other ones, you'll see that that is the case. Now as you can see, as we stated earlier, moving over to the Nasdaq, our trade idea that we'd been in since around the 24th of November is currently doing very well and is almost at our first take profit level of around 12,670 points. And likewise, my analysis for this is that any pullback opportunities are potential buy-in opportunities. But preferably, if you are going to enter during any pullback, I would prefer that pullback to occur to this trend line, because that is what is supporting price currently. And just scanning through some of the other equities, this being the Dow Jones Industrial Average, this is probably the trade idea that is lagging the other two, just because this indice isn't very heavy in tech stocks, which are dominating the bull market right now. But the same theory, I do expect the Dow Jones to hit around 31,000 points at some point in the future. And the same thing goes for the DAX. I do believe that this pullback into this support zone is just going to be another buying opportunity. And likewise for the UK 100, as we've just broke another significant level of structure on our way to this target that I have set out around 6,700 points. So overall, all the equity markets are looking extremely bullish because of the vaccine news, as we've been talking about for a few weeks now. Now moving away from the global equities, as you can see, gold bounced off this very key support level that we had identified quite a number of weeks ago. Now, as I stated last week, we didn't get our entry opportunity into this gold trade down to this support zone because price just ran away from us, which is a very typical aspect of gold. Gold is very volatile, and therefore sometimes our entries just won't get triggered. However, I am expecting a small trading opportunity to enter the gold market. So dropping down to our 4-hour time frame, the same zone that we had highlighted to take our original short trade from a couple of weeks ago, around the 1850 to 1860 level, I am expecting a bounce from here to the downside, at which point my target profit level will be around the 1812 level. Now I will 100% be waiting for price to rise up to this level, because as I stated with gold, gold is capable of doing anything, as you can see here previously from its very volatile movements. So it's very important to trade gold cautiously, because gold can do anything it wants. I will be waiting for confirmation of downside momentum once we do hit this level, because gold has a tendency to give a lot of fake outs. So essentially, I won't be surprised if gold pops up above this level and does some crazy price action and then begins to move back down to complete the trade idea that I'm talking about. Now, fundamentally speaking, the reason why gold had this fall off the edge of a cliff is because of how well equities began performing. So from a risk sentiment standpoint, gold usually performs poorly when equity markets are doing very well, unless there's a lot of risk in the market. So right now, investors are starting to see the market as less risky than it was a few months ago, and so that's having this downwards effect on gold. So that's just something to point out if you're interested in learning the fundamental aspects of these markets. Now for you guys that trade the currency markets, I've gone back to looking at the EURUSD just because I've seen quite a significant development happen in the markets over the past few days. So as you can see here on my chart, I've highlighted some very significant levels of support that I believe is holding price currently. So right now, if we take a look at where price is at, you can see that we're in the process of potentially breaking through this major weekly institutional zone. If we are successful at breaking this zone, I definitely think that the sky's the limit for the EURUSD, and we could potentially be seeing a 1.5 to 1 euro to United States dollar. Now, as crazy as this may sound, you have to remember that a lot of this will be fundamentally driven. So if any news comes out that will be bearish for the US dollar, it will have a significant impact on how this currency pair reacts. So this is definitely something that I'm watching for a long-term perspective. But other than that, because we're trading in this zone right now, price can go either way. So if I do see any development in this trade idea, you guys will be the first to know, and you'll have the trade idea and setup that I'll be looking at as soon as that comes on site. And for you guys that religiously watch my videos, and I'm truly thankful for that, this is the trade idea that we had highlighted last week that is actually looking very good. So I did state last week that in the commodity of oil, we were at a decision point, and that I was expecting a retest of this 44.1 level. And that is exactly what happened. And we got triggered into this trade about mid last week. So right now, everything in this trade is looking very good, as we set a higher high on the daily time frame on Friday. So that is usually a very bullish sign, signifying that our trade idea is looking very good. Now, like I said, I expect to be in this trade for a few months, definitely into maybe the first few months of 2021, just because of how far price has to go. But I'll definitely be expecting a full recovery of the price of oil up until about the $53 level. Now, even though this will take a while and there will be pullbacks in between, definitely stay patient, because I'm pretty confident that this trade idea will work out. But even if it doesn't, we have a stop loss in place, and eventually we will move it to break even once we break through another significant resistance level around here. Furthermore, to add confluence to this trade idea, fundamentally everything is looking pretty well. We got quite a decisive price action pattern here. If you guys are more seasoned at trading, you'll recognize this as a cup and handle pattern, which is usually signifying something very bullish is going to happen, as well as the fact that fundamentally with the stock market pushing higher, that is usually a very bullish thing for the price of oil. So definitely stay at it, and I will also be posting intraday trading opportunities with this commodity for you guys that missed this entry point. Now, with that being said, this concludes our market breakdown for this week. Thank you to all who took the time out to watch the video, whether it be part of the video or the entirety of the video. Remember, I post these breakdown videos on a weekly basis, and I post a lot of different trade ideas during the video. So subscribe to my channel so you don't miss out whenever I upload. I also post educational content that is suitable for both beginner and experienced level traders throughout the week to both this channel and my social media pages. And the links to those pages are in the description below. Also, if you found the video useful, support us by dropping a like on the video so the YouTube algorithm helps us reach more people. Thanks, and peace out.